Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me as always is Priyanka. And well, Priyanka, what a day of trade we've seen today. A one-way downward trend coming in on the markets today. Quite visibly, this new virus that we've been hearing about, the HPMB virus, has got the street spooked, even though we've had veteran doctors coming on the channel and saying this is not a new virus and this is not going to be anywhere close to COVID or a COVID-like situation. But nonetheless, the street has taken this virus with a slight bit of a cautionary sentiment coming in, because Nifty has closed just above that 23,600 mark. So we had slipped below that. We've seen some sort of recovery coming in on that front, but the recovery has not been enough to mitigate the losses that we've seen coming in from the day's highest point of 24,090 odd on the Nifty. Sensex also following suit, 1.6% lower. India VIX is the one that merits a mention today, because 16% higher, roughly 15.5% higher is what that India VIX has spiked up above the 15.5 level, 15.65. There you have it. Broader markets also taking it deep on the chin today. Nifty mid cap was lower by roughly 2%. Nifty small cap has underperformed the rest of the market, and a 3% cut, more than that rather, 3.2% cut coming in on the small cap index just on an intraday basis. Only a couple of stocks, a handful of stocks that have managed to hold on to the green from the Nifty pack, likes of Apollo Hospitals, Tata Consumers, Titan, HCL Tech and ICICI Bank. 5 stocks versus 45 that have closed in the red, and largely dragged on by Tata Steel, Trent, BPCL, Coal India and NTPC. Sectorally, all the sectors have closed in the green, so that is what the market breadth has shaped up to be like today. Nifty IT, the least sectoral loser, just a 0.1% cut coming in. However, on the flip side, weak quarterly numbers updates coming in from PSU Bank, so 4% cut on that front. Energy, realty, metal, media, auto, bank, FMCG, pharma. That's the pecking order in which from the most to the least cuts that have been seen sectorally. But Priyanka, a couple of pockets of stocks and also certain sectors in focus today.
Absolutely, Snehi, very well compiled. In fact, in your opening comments only. But the kind of figures we've gathered for today. If you talk about PSU Bank, that's hitting 1 month low, metal hitting 9 month low. The pockets what Snehi is talking about is wherever there is an earning visibility, wherever the business updates are strong enough, there the traders are reacting in a positive manner. In fact, let's get you some more updates, some key updates which came in from bank. HDFC Bank, strong deposit growth, was not able to hold in because, of course, the market was falling. It was just like a falling knife today. More than 2% that we saw HDFC Bank cut coming on HDFC Bank. Though there are overweight reports on the HDFC Bank, but that actually did not help the stocks today. Whatever the positive comments came in from brokerage note also. You talk about Bajaj Finance, AUM grew, but then the kind of MFI stress which continues to drag on the NBFC space, other than not just Bajaj Finance, talking about the other banks and their MFI component, that seems to be one pocket of worry for the investors and traders also. But then QSR space, banking space, NBFC stocks, they were in focus today. You talk about urban demand scenario, that seems to be challenging again due to inflationary pressure you talk about. But the rural demand, that continues to report a gradual recovery. That's the key comment which came in from the business updates from Marico. Though Dabur was little on the disappointing side, but then strong updates came in from discretionary demand, discretionary spaces like Nykaa or Titan, or even for that matter, what came jubilant on the weekend, last week, what we saw. So we've seen wherever there is a visibility, those pockets haven't done that bad. But overall, it was a red day for the markets, what we saw. But then what is it? Is it because of the new virus fear, or is it a fear which is possibly because of a possible yen carry trade? The kind of comments came in from Japan. That has also spooked much of the fear in the markets. Let's understand, where are we headed to now? Ruchit Jain is there with us to talk about the technical aspect of the markets right now. Ruchit, what we have seen is the kind of call buying, the put buying we've seen of the lower levels. We've broken 200 DMA, and whenever we have broken 200 DMA, the lower level which could maybe markets could revisit is nearly 23,300. Are we headed towards those levels? Do you see a possibility? Because the kind of put buying which we have seen in the market, that again validates this argument.
Yeah, hi, very good afternoon, Priyanka. Well, we have seen that post some consolidation, markets have resumed its downtrend, and mainly because of FIS selling. We have seen that in the last 2 or 2.5, 3 months, whenever there have been FIs selling figures in the cash segment as well as in the index futures segment, we have seen that the markets have seen a price-wise corrective phase. Now, during last week on Friday's trading session, we witnessed again some more few fresh short formations happening from FIs in the index futures. Although the ratio is at lower levels around 17%, but still there are no signs of short covering by them. And in today's trading session, key indices such as mid-cap index is there, which indicates more of a broader market witness. Even Bank Nifty index has closed below its 200-day EMA, after a long period of time. So I think these are signs that markets are not in a phase where we would see a significant up move. But yes, as you rightly pointed out, that if the weakness continues, then the previous swing low, which was there around 23,300, 22,000, 23,250, that could be revisited.
Those are the levels that you are watching on the downside, Ruchit, and also given in mind the kind of VIX move that we've seen today. What are the stocks, if any at all, in a market like this where you are still spotting some positivity, some up moves on the charts at least?
So if you look at the charts, then the relative outperformance, in this falling market is seen only in one space, which is, pharma and healthcare stocks. And I think that outperformance could continue going ahead. Even a few days ago, in the month of December, when in the second half, when the markets have seen some correction, we clearly saw that the pharma names were outstanding. They have corrected a bit in the last couple of trading sessions, but no trend reversal signs for now. So I think if one has to bet long in such kind of market, then pharma and healthcare space is the only one where one should look for opportunities. And Apollo Hospitals within this space looks quite positive at current levels. The stock has seen some consolidation, but entire consolidation it's above its 20 EMA support. So one can look for buying opportunities there with stop loss below 70 to 90 for potential targets around 76.50. And one short call would be there on metal space, which is Tata Steel. So entire metal space, we are bearish since some time when the dollar index gave a breakout above that 108 mark. So there's an inverse correlation that whenever dollar index rallies, the metal space tends to underperform. And we can clearly see that underperformance even when the markets were showing pullback moves. So Tata Steel has broken its support. I think entire metal stocks could still see some further pressure in the near term. Short-term traders can go short on Tata Steel with stop loss above 136 for potential targets around 125.
All right, so sell call on Tata Steel and Apollo Hospital on the positive side. Combination of stocks that you've given us, Ruchit. Thanks very much for these two recommendations. Now, let's get you some more piece of news. In fact, word from the wise, we did speak to Hiren Ved today to understand what is he picking in sense of market outlook, sectors, and what is he eyeing the likes of Eicher Motor, Bajaj Finance. Is it finally time to park your funds in those large cap names? Let's decode this investment rationale and look at where Hiren Ved is making money.
Our portfolio positioning is largely across 4 large themes, right? One is manufacturing. Within that, there are sub-themes like EMS, power transmission, cap goods, CDMO. I mean, this is one big theme. Second is platforms and tech. Third is higher end consumption, right? So broadly, we've stayed with the themes. I think what could happen this year is that some of the so-called high-quality compounders which didn't do anything for a long period of time, right? And I think 2 of them, for example, have given very good numbers, Bajaj being one, Eicher being the other one, right? I mean, some of these might surprise and start growing again. And I think that's where people have kind of given up, or where they've underperformed the Nifty for the last 3-4 years. But incrementally, they seem to be, coming back. So I think the opportunity this year could really be that out of those 10, 15 great compounding stocks which haven't done anything great for the last 3-4 years, maybe 2-3 of them can surprise and start doing well.
Okay, so that's the word coming in from Hiren Ved, the positive on EMS, capital goods and the CDMO space. But on that note, we'll slip into a short break on this edition of Your Trades and bring you more news and updates on the market day that we've seen just on the other side of this break. You stay tuned. We'll be right back.
Welcome back. You're watching Your Trades on ET now. Now let's get you the action from the derivative space. Clearly, it was a short built-up on both Nifty as well as Bank Nifty. VIX was up more than 2%, settled at level of 15.7 today. But then what we saw that the active puts was from the lower strikes now. Now, strikes like 23,500, 23,600, there is where the maximum of the put buying for this week's expiry lies at. And in fact, the maximum of the call writing, what we saw was at 23,800 and even 23,700. So looks like there is no support at the moment, and of course there is a cap at the upper end. So traders are definitely expecting more fall from here, at least not a recovery at this point in time, what we see from the today's data point.
Absolutely. Seeing a resistance level on the upside but seeing no support visible on the downside is something that could be slightly worrisome for the markets, but that's what the derivatives diary is shaping up to be like today. Let's shift focus and talk about the big story of the day, and there has to be ITC, because that was the stock in focus. Today was the record date of the ITC and ITC Hotels demerger, so that's the reason why the stock was on our radar. And it continues to be ITC on the back of that hotel demerger. All you need to know about ITC Hotels and lots more on the growth, competition front, and a detailed balance sheet statement. Let's go across to Sharath for that comprehensive analysis of what of everything you need to know about this demerger. Sharath, take it away.
Well, yes, ITC Hotels is in focus, and of course today itself the entire ITC stock is trading X the hotel business. Now, of course, calculating the fair value, important things to know. And if you are holding 10 shares of ITC, you will get 1 share of ITC Hotels. Now, brokerages are expecting that the pricing could range between 113 to 300 rupees per share. Now, also remember that British American Tobacco is expected to hold roughly 15% stake in this new demerged entity. Now, calculating the fair value, the difference coming in between the January 3rd close and January 6th opening would be there. And interestingly, this would be excluded from the indices for 3 business days after listing, provided there are no circuit breakers. That's an important point. Now, of course, there might be a delay in exclusion if the stock starts hitting the circuit levels. Now, of course, the listing is expected to happen over the next 1.5 odd months by the mid-February. But now let's also look at its peer, Indian Hotels, and of course the growth triggers coming in the 3 segments, the non-F&B business, Taj SATS category, and also they expected to 2x their revenues by 2030 to a consolidated basis of roughly 15,000 crore rupees. But if we take overall the recent listings post the demerger, the entire time taken for the record date, Jio Financial, it took almost 33 days, Piramal Pharma, it was 45 days, and NMDC Steel was 4 months. Of course, comparing IHCL and ITC Hotels is also a very important point, which I'd like to point out. The rooms, if you look at it, roughly, you could say 13,000 rooms are there when it comes to the ITC Hotels. Almost, you could say, double when it comes to Indian Hotels. Revenue per room, the RevPAR, that's an important operational parameter which we check it for hotels. It's almost even Stevens, but if you look at the occupancy, that's on the higher side when it comes to the Indian Hotels. Now, let's also look at the market cap expectations and the margin. That's where we derive the valuations also. And if you look at it, the market cap, it's largely double. If you look at the range which have been given by analysts, and the margins is on the favorable side of ITC Hotels. But do remember, Indian Hotels also is having some budget hotels also in their category, and that is why there might be a reason that the margins might be slightly lower when it comes to ITC Hotels. And these are all the consolidated numbers as per FY24.
Okay, Sharath, thanks so much for taking us through what is going to happen when the ITC business, the hotels business demerges, and how it stacks up against peers. But also important to take a look at what's going to happen to ITC Limited once the demerger has gone through. Now, today was the record date for the same to happen, and price discovery has happened at roughly 459 rupees per share of ITC, which is a cut of 22 rupees per share. This is largely what the street was estimating for it to happen, and the price cut has happened along estimated lines. Now, how does ITC look post the demerger? Now, important to notice that the overall revenue for ITC is 73,000 odd crore rupees, out of which ITC Hotels contributes 4%, which sums up to 3,100 crores. So, in the next earnings post the demerger, whenever that happens, like Sharath mentioned, mid-February, after that, the earnings immediately after, we can expect a cut of roughly 3,100 crores from the top line of ITC. And PAT, 3% is what the hotels business contributes to the overall PAT. So 765 crore rupee cut from the overall PAT of ITC is also something that we can expect. How is the sum of the parts, the SOTP value, going to look like for ITC once the demerger goes through? The cigarette business used to contribute 62%. Now that contribution is going to be hiked to 64%. FMCG used to give 17%. Now that's going to be bumped up to 18%. Paperboard and agri at 5% each. And IT and cash at a total of 4% each, bringing the total sum of the parts, the total pie, to 100%, excluding the hotels business. Also important to talk about the stake of BAT, which is British American Tobacco, and ITC. Now they have said earlier, and they have mentioned that they plan to sell roughly 25% of their holding in ITC Limited, which means if you talk about the 25% holding in ITC Limited and correspond that to the 40% that ITC Limited holds in ITC Hotels, we can expect a BAT stake sale of 15% in ITC Hotels post the listing. So this is something important to watch out for. And lastly, some important triggers for ITC going ahead. Taxation rates, the prospective 35% tax rate on GST that we were talking about, which was not discussed in the previous GST meeting but continues to be on the agenda. If that goes through, it's going to be detrimental for the cigarette business. Paper business in Q3 is expected to be strong, so that's going to be something to watch out for. And lastly, probably FMCG players have been complaining about urban demand. So the demand scenario for the FMCG part of the business is also going to be important to watch out for.
All right, so that means BAT, if sells their stake, there is going to be a supply which could possibly come.
In the market, yes,
all right, after once it's listed. So there could be some more. The road looks to be challenging ahead. All right, let's move on. Let's get some more stocks that were buzzing in trade today. Rabindra is joining us to tell us about the stocks. Rabindra.
Well, Nykaa is in focus, where company has announced its Q3 FY25 business update, and the company's total income growth was good in Q3. Company vertical, beauty vertical has grown faster than previous quarter, and the fashion vertical expected to contribute about 20% of revenue. And the management is confident of strong growth in the long term. And Morgan Stanley has also come out with a note on Nykaa, and they have maintained their overweight rating with target price of ₹200. This says that the growth in fashion vertical is in line with estimate, and the company's online fashion platform demand was weak. Moving to next, SBI Card is also in focus, where Nomura has come out with a note on SBI Card, and they have upgraded the stock to buy with target price of ₹825. This says that the cyclical recovery is at a play, and the FY26 outlook look better than FY25. And Nuvama has also come out with a note on SBI Card, and they have upgraded the stock to buy with target price of ₹850. This says that the company's credit cost outlook is improving, and over the last 2 years, its earning has missed consequences due to a persistent rise in credit cost and low visibility of turnaround. And the potential rate cut by RBI in the coming quarter will be an advantage for SBI Card. Moving to next, Union Bank of India is also in focus on Q3 business update, and the bank total business grew by 4.7% year-on-year basis, and their total deposit was up by 3.76% year-on-year basis. Moving to next, Angel One also in focus, where company's client base was up by 7.1% quarter-on-quarter basis, and the option premium turnover down by 2.5% quarter-on-quarter basis. Apart from this, Titan is also in focus on back of Q3 update, and the companies registered a growth of 24% year-on-year basis in Q3, and the domestic jewelry business was grew by 25%. Watches and wearable business was grew by 13% year-on-year basis.
Okay, Ravinder, thanks for taking us through all the list of stocks that were in focus today on the back of Q3 updates, and we've seen some momentum on these stocks on the back of these numbers as well. But on that note, we'll wrap it up on this edition of Your Trades. It's a goodbye from Priyanka, me, and the team that put this show together. Thanks so much for watching.